Well, as per an ET report, RBI has disallowed loading of prepaid payment instruments through credit lines. Now, this rule by the banking regulator is being seen as an effort to clamp down on the fintech card companies and firms operating as neobanks who have tied up with banks to offer these credit lines. Now, thus this regulation is expected to negatively impact companies like Slice or Unicard, who have been recently adding a lot of customers through this route. Now, according to a Macquarie report, some of the new generation players were adding close to 2 to 3 lakh cards every month, and as this would stop now, so positive impact would come on banks which have a higher card base or credit card issuers, and thus SBI card comes into the picture here, as it is India's second largest credit card provider and the only listed company which is solely into the business of providing credit cards. Now, Morgan Stanley is of the view that any regulation that is adverse for the fintech sector is likely to be positive for SBI cards, and thus we have seen a sharp up move in the share prices of SBI cards today. It has gained as much as 4.7% in trade, which is the highest gains that we have seen in the last 15 weeks. Now, despite these gains that we have been seeing in SBI cards in trade today, there is one overhang on the company, and that is the impact of uncertainty around the financial impact of linking credit cards with UPI, a move that is expected to drive down the merchant discount rates and the interchange fees, which is actually an income for a credit card issuer like SBI card. So this negative or this overhang continues to be on the company, but in today's trade, the company has been reacting positively on the RBI news.